Today, we're going to cut through the crypto confusion from the biggest mistakes people make to what crypto actually tries to solve and what regulation means for all of this. Stay tuned to learn more.
Welcome to a Wiser Retirement Podcast, where we cut through the noise and bring you real, honest conversations about investing, retirement, and building lasting wealth. No sales pitches, no gimmicks, just everything your financial advisor won't tell you.
Welcome to a Wiser Retirement Podcast. I'm Casey Smith. Today, I'm joined with Robert Swarthout, founder, CEO of Teton Crypto Capital. Today, we're going to discuss why crypto still confuses investors. Hello, Robert.
How's it going?
Welcome back.
Thanks for having me.
It's been a while.
It has.
I learned recently that I'm only on 50% of my podcasts.
Okay.
I was like, we did record it a bunch in a row,
Right.
but I haven't been on in a while. And then I was like, oh, Shauna's kind of taking over my podcast.
That's
Good
right.
grief.
That could be a coup.
I know it could be. She gets a lot of views, so
Yeah.
I get why.
Right. Yeah. The it could be a slow takeover that you notice the next day.
Right.
All of a sudden, the views are a huge disparity. So.
And we just changed our podcast art, so our podcast art no longer has my picture on it.
Oh, okay.
But that's fine. This is a team effort. Wiser is
Sure.
very much a team effort. It's not about
Absolutely.
one person.
Yep.
Which is why we call it Wiser Wealth Management and not KC Wealth Management.
Exactly.
It's about all 18 of us now.
Wow. I remember in my last business that stage that like the 14 to 18 people was my most favorite period.
Yeah.
After that, it can be fun, but it got less and less fun as there was
About
more
more like an
employees.
enterprise and less like a
Right. I wasn't
startup.
doing any of the things that I enjoyed doing at that point. So yeah.
Yeah. Well, my thing, my success has always been because I hire people way smarter than me.
That is
So
the secret.
I
Yeah.
walk through here every day going, wow, these people are just really, really good.
And they get to focus on one thing or two
Yes,
things
Yes, that's true.
instead of wearing 10
That is
hats.
true. I come in with 22 things to do and they can just be really good at planning or really good at
Good at
HR
HR.
or really good at,
Yep.
portfolios,
Yep.
right? Okay. So you've been having great success in your crypto fund.
Yep.
I get your newsletters, which congratulations on that.
Thanks.
A recent survey by the National Cryptocurrency Association, there's associations for everything. Nearly 90% of Americans said they feel they don't know enough about how cryptocurrency works, and the lack of understanding is the biggest reason they haven't adopted it yet. I thought that was very interesting stat.
It feels a
we-
little loaded.
Yeah, I know it does, doesn't it? Yeah. We continue to have more crypto in our portfolios,
Yep.
meaning more clients in our crypto models
Right.
that are asking for it.
Right. And that will continue to increase until functionally everybody or those that want it.
I honestly feel
Long
like
term.
we're getting close enough that we should just be like, we have cryptos in our portfolio. It's going to be less than 3%.
Mhm.
If you don't want it,
Please
then you
let us-
can notify us. But everybody's going to get it because
Yeah.
what happens is, company email open rates like 70%.
Which is awesome.
No, it's not even that high. It's 55%.
Okay.
55% of our company emails get opened, which means that you probably didn't even know
No.
that we offered to have crypto in the portfolio because you don't open an email.
Right.
We catch them during the review meetings, of course, but
Right.
so there was like a second wave as review meetings came through. But I would still argue that people struggle with what it means. It's in there
Mhm.
because Casey and Shauna and Andrew, Andrew,
Yeah.
William and Michaela said you should have cryptos in your portfolios, and they go, okay.
Right. But Andrew shared the data on it's been a while, that podcast, but like about how much it can benefit a portfolio.
Yes.
But I think that at the end of the day, I think people get hung up on crypto because it's this mystical internet money thing, right?
Yeah.
If you rewind the early 1990s, people didn't understand the internet. They're like, why would I send an email when I can just send a letter? I mean, we're kind of in that same stage with crypto still. You couldn't necessarily invest in the internet back then. I think that's the difference now.
Sure.
And people hear these wild stories about somebody investing $100 and turning it into some gigantic number with crypto. I think largely those days are behind us. That is gambling. We'll be very clear about that.
Yeah.
And that's not what I think we're here to talk about. But people, I think, get those two confused sometimes. And I think that at the end of the day, just trying to step back and understand, I need it as my portfolio because X, Y, and Z reason, or I don't need it in my portfolio, whatever it may be. But having reasons why you're doing something is important. So
So what do you think the biggest mistakes people are making with crypto right now?
I think that people are trying to time the market. I'm a big believer in just a buy and hold strategy with crypto. This is a wave, and in my opinion, the wave is going to be bigger than the internet was proper. So this will play out over decades. It'll transform finance. Finance is a much bigger deal around the world than the internet is, even though the internet basically touches our life from the time you wake up to the time you go to sleep.
Right.
But I think that over time, it's going to rewrite finance. It's going to, and then blockchain can be used for things not attached to finance, like voting or car titles, house deeds. We've talked about this in the past. So it'll slowly permeate everything. And, you're betting on the long term if you're betting on crypto versus the mistake that people make now is I think they're trying to bet on the next year, the next 6 months, wild swings of crypto. I mean, it was just down the last 2 days and good luck in guessing why. Like it can be tricky.
Right.
So.
When we did our initial crypto investments here, I told everybody it was a 10-year plan.
Absolutely. Yeah.
So we're going to put 2% of your portfolio in here and we're going to look at it again in 10 years.
Right. And in my opinion, not financial advice, I think that 2% becomes substantial unless you are rebalancing along the way. Right. I mean, you're going to have that challenge of figuring out do I really want to sell some?
Right.
That's generally not the challenge. It's like, take an underperformer and buy some more of it. I think this is, obviously it'll have its periods where it underperforms, but it's the highs and dips. And, part of, I think, the reason why you hear these crazy stories of people losing money or people making a bunch of money is, again, those swings is because there hasn't been regulation. So it's like the market can be easily manipulated up or down.
Yeah.
And if you're trying to do this on a day-to-day basis, good luck, because it's 24/7, 365. You're not going to get any sleep, or you're not going to get good sleep. And that's the challenge of, having a clear head to make good decisions. So.
What I'm seeing sometimes are people who are doing this on their own have a way, they don't understand asset allocation, and their allocation is way weighted toward crypto, almost like rolling the dice. Is crypto going to work out or not? And if it doesn't work out, they're in a lot of trouble.
And I would say when I've seen that, it's generally a younger crowd. And I don't, they may have their reasons. I kind of made up that they're maybe playing some catch up for whatever reason. They can't afford the house they want to buy or all these things. There's, in some sense, the younger crowd has a deck of stacks stacked against them these days. So they're doing that. And they may have 90% of their net worth in crypto.
Yeah.
And if you're young in your early 20s, maybe, but as you get older, that seems pretty crazy, even to someone that loves crypto like me. So,
or even higher.
Right. Yeah. 100%.
Yeah. And then there's also all the biases, all the financial biases, kick in where, you feel like you don't want to miss out. So you're making purchases that you don't understand. Also you're, when it sells off, you start selling in a panic because it's going down. I'm losing money. I got to get out of this thing.
Right.
And that's not really how you need to be thinking about any of this.
Yeah. I mean, you can kind of apply a lot of the same kind of thinking you might do with stocks or, the equities. Like if everyone's racing to go buy something, it may not be the time to buy it.
Yeah.
Or vice versa. So you have that, and just
the herd mentality.
The herd mentality, and then even more so in crypto, it's sometimes referred to as tribalism, because it's like you may find a token or two that you really love. You buy into it, and all of a sudden, all the other ones are crap because mine are awesome. And it's exhausting because that's all over the place in crypto. You see that even with the Bitcoin guys. Like a lot of the Bitcoiners are where this is a one token world, and all the other ones are just trash and going to zero. Which, some of them are trash and will go to zero, but most of them, if you are buying correctly, will not. So it's just having patience and having just, I guess, the patience to want to spend the time to do the research. Or I guess the easy way to do it these days is the ETF, the Bitwise top 10 index. You're taking some of the risk out of choosing the wrong token. Like if a token's already in the top 10, 15, imagine that index will expand over time, much like an S&P 500.
I was really excited about that index, and I've made recommendations about it, personally to people. But I'm really disappointed that it issues a K1.
Oh, interesting.
Yeah. And that's kind of a deal killer for us as a firm.
Right.
Because as a firm, that means people are going to do their taxes in February because they're excited about their taxes for whatever reason.
They have to amend.
And then there's a K1 that shows up in March and they
Right.
don't remember to wait for the K1.
Yeah.
So that whole ETF is on hold for us right now until we figure out what the best course of action is.
Wonder why there's a K1 on that. That's interesting.
It's how the ETF is built. So it's to not get a K1, they'd have to have built it differently.
And not to necessarily jump ahead here, but like, do you think that's a regulation issue? Like regulations would clean up whatever caused them to do that?
No, not necessarily. Not necessarily.
Yeah.
We'd have to really get into the weeds, and I don't think our listeners want to
get into that.
I can do a whole podcast on ETF structures, but that part was disappointing. I still think it's worth an investment from a personal standpoint because you're getting, if you don't know what to buy in crypto, you buy an ETF and it literally has a top 10 in it by market cap size.
And they're going to deal with the weighting, and they're going to do all the adjusting underneath the hood.
Yeah.
It's a passive way to make an investment into a market that you probably don't have enough knowledge in. I'll be very frank.
Or if you buy it inside your IRA, the K1 doesn't matter anymore.
Correct. Yeah.
Because so you just have to buy it in a retirement account, and you don't have to wait for the K1 to show up. If you buy it in your brokerage account, you're going to have it's not a problem. It's just you got to wait for it before you buy your tax return.
I helped my sister-in-law buy that, so I'll have to keep that in mind when I tell her to do her taxes.
I think that may have been for me too.
I believe.
Yeah, exactly.
Yep.
I don't know if I fully even realized it at that point, but in our committee meeting, Andrew was like, "This has a K1." I'm like, "What? Why?" And then he told me, I was like, "Oh, well, that makes sense, but why?"
Right. Yeah. Make it stop.
Why would you do that?
Yeah.
You'd have to have, the only way around it now is you have to have a ETN, and we don't want that because if the company went out of business, we don't own anything.
Absolutely.
It'd be like a financial crisis all over again. Who was that? Oh, Lehman Brothers. They had ETNs.
Correct.
I think 3 that went out. Anyway, not to take us out of our conversation here. Chasing hype and trends. I feel like there's less of that now
because crypto's not in a super euphoric cycle right now.
Yeah,
that will come back. There's no doubt that will come back
as things.
And when you go to get your haircut, and the person that's never talked about crypto start talking about crypto, that is a signal. Right. Take advantage of that, and if you have crypto, it's probably the time to start taking some off the table.
Right.
When they're telling you about this new coin, especially like I find entertaining, and not that I know all 20,000 tokens. I won't claim to say that, but like I feel informed enough to know when somebody brings up a new token and tells me how it's going to solve the world's problems, and I've never heard of it before. I'm like, okay. Pump the brakes a little bit on this one. Maybe it's awesome, but maybe it's early.
Yeah.
But you could think about that market cap scale as the further that you get down that market cap scale, that's a risk scale, and it's just inverted. It's going the opposite way very quickly. And and you could be right, and you could turn $100 investment into a much bigger number, but the odds of that are probably like going to buy a lottery ticket.
And I think that's what some people are trying to do with their crypto. They think it's their lottery ticket, and I think it's a new asset class that should be a part of your portfolio. It's going to be a part of your everyday life 10 years from now. But you have to use it within moderation because of the volatility.
Yeah.
Before we jump back into the episode, do you know if you are ready to take off and launch into retirement? Get your pre-retirement checklist, a free guide from Wiser Wealth Management. From cash flow to Social Security, we've got your countdown covered. Go to wiserinvestor.com/guides to download your free guide today. Now let's get back to the episode.
So what do you think, what problems is crypto trying to solve? I think this goes back to one of the first episodes we did is like, why crypto? What is crypto?
Sure.
What is blockchain? But why does crypto even exist? Maybe this will help people get over the hurdle of the why crypto.
Yeah. I mean, if you fully rewind back to the financial crisis in 2008, 2009, crypto grew out of that, or the genesis of crypto happened because the mistrust in the system back then, how it seemed like money was being given to bail out a bank, and maybe, and at least in their opinion, the banks caused the problems and all the things, right? We don't need to rehash all that, but mistrust in the system was the genesis of Bitcoin. I love using this analogy. Like, we live in a world that every single day seemingly has less and less trust. Like, I don't care where you look. Crypto doesn't have a middleman, and it's a trustless system. So it's like an interesting place and time for it to kind of be happening. So, whether it's purely just the money side of crypto, or just a transaction and you want to have, we've talked about this before, a smart contract is code that runs on a blockchain. It executes on the blockchain based upon what the code says. And you don't have to have an attorney or a judge to kind of enforce a contract. It's going to do what inputs it has and whatever outputs it has to do that. So, that can get confusing really quickly, but I think that it allows people across the globe to interact in ways they've never been able to do it. Borders kind of dissolve and go away, at least country borders. And I think, we could talk a super long list about what crypto is doing, but fundamentally, I think it's trying to provide trust in a way that you normally wouldn't have trust by taking a middleman out and allowing people to freely interact it much more efficiently, whether that's time or money.
So basically, crypto is a tool and technology, not just an investment vehicle.
Yeah. And I guess to kind of rewind just a little bit, crypto is a use case of blockchain. Blockchain is the fundamental type of technology underneath it. Again, you could use blockchain to do voting. You could use for car titles and house deeds. That's not really anything monetary there.
Yeah.
But the monetary use of it is often referred to as crypto. And, it could be smart contracts to help settle. I've seen all sorts of exotic Wall Street products are being introduced. Even yesterday, the NYSE announced that they've been working on a platform to bring their entire exchange onto blockchain. Wow. 24/7, 365 with fractions smaller than a penny for trading and for the actual fractions of a share of whatever company. So this is going to go from a year and a half ago, this was fantasy land, to happen very quickly, I believe. And, even 2 months ago or maybe 3 months ago, Paul Atkins, the SEC chairman, said that within 2 years, he thought all U.S. markets would be on blockchains. My guess is they'd be running in parallel. We're not fully doing a switch over in 2 years. That would seem a little far-fetched to me. But all of a sudden, it seems like we're on pace because NASDAQ's already talked about this. And all of a sudden, you had NYSE, which is massive in the flows. So it's going to be it's going to seemingly feel like a light switch moment, I imagine, here within 2 years, where we look back and we're like, oh my gosh, this is everywhere.
Yeah, all that trading you see on the floor and people standing around tables, that's all for show.
All honestly. For show. And so it's going to go to instant settlement as well, is what they were talking about in this. So it's currently T+1, I believe.
Yeah. And
think about all the liquidity that would be freed up. It's like trillions of dollars that are just tied up in that one-day cycle over and over and over again. Yeah. So it's pretty crazy to kind of think what impacts that might have. I don't claim to have the answer to that. But I've been wondering, is that a good thing, a bad thing? Is it a short-term good thing, short-term bad thing?
Unfortunately, it frees up liquidity, but also it could free up hype too. So if you have a really polarized situation and market selling off quickly, and that money is going to move into something else, that plus 1 day is now instant. That means it's just going to move a lot faster.
Yeah. I would imagine circuit breakers need rethought, all those things, a bad news event. Normally, a lot of times you'll see bad news
or manipulation
or anything not good.
Right.
Happen sometimes after hours. Well, after hours goes away. So you have that problem to deal with, problem in air quotes.
That's true. And you could have 24/7 trading.
Right. But they've I read a study, this is a little bit of an aside, but I read a study, had we had blockchain and we knew we were fully on a blockchain back when the financial crisis happened with Lehman, there's a good chance it wouldn't have been nearly as bad, because they would have known the liabilities and where they were at versus having to uncover them as they were basically taking a company through bankruptcy.
Yeah.
And it was 10% of the problem, what we actually ended up thinking the problem was.
Right.
So I don't know. There could be positives, but again, in life, there's always the surprise negatives that seem to surprise people more often than the positives. So.
Yeah, absolutely. Okay, so let's talk about regulation. So we've had some regulation in the last year since the Trump administration, the Genius Act, right?
Yep, for stablecoins.
For stablecoins. Speaking of stablecoins, have you seen a increase of them purchasing U.S. Treasuries?
Have
you seen any data that would say that, wow, they owned 1% of treasuries, now they own 5%?
I don't know that answer. What I have noticed is you started to see some more basically sponsors come up with to start run their own. I mean, it's a little over a year, but Ripple has their stablecoin in dollars. It is past the 1 billion. I think it's 1.3 billion market cap. So it's still relatively small compared to USDC or Tether.
Yeah.
But you have the state of Wyoming has issued their own. And they have their own laws that also govern it on top of the U.S. one. So it's a little bit more strict there. And I want to say there's another state or two that has talked about that. And you have companies doing it too. So right now, by law, through the Genius Act, if you're the issuer of a stablecoin and say you go and you put money into my stablecoin and I'm the issuer, I get to collect all the interest on whatever I may have. I'm not allowed to pay you interest. So that's a very simple way to use a stablecoin, but it's also terrible for the holders. Right. And it's amazing for the issuer,
right? Especially
in the interest environment we're in right now.
Yeah, because there's no income.
You're right. So I mean, they're getting 4 or 5%. So kind of wrapping this back around, the Clarity Act that's trying to go through the Senate. So the House passed their version of the Clarity Act last summer. The Senate is working on their version. They will get reconciled, assuming it gets through the Senate. But the Bankers Association is now fighting because they were trying to slip in a provision in this Clarity Act to allow issuers to pay optionally pay interest to holders, much like a bank account.
Yeah, right.
Novel concept. But there's that seems to be the holdup right now. I guess the biggest holdup through the Senate. So it was supposed to be voted on last week. It did not. It got bumped to the end of the month. There's all these negotiations. There's a bunch of drama happening around this. That I think at the end of the day, it all gets figured out. Nothing in Congress seems to go smoothly. So we just have to get through the drama,
right?
But that's part of it. So it would be part of the bigger bill for clarity. I would just hope that this doesn't hold up the bigger Clarity Act, because we need the clarity. We can come back and fix stablecoins later if we need to.
Right.
But the rest of crypto is being held up, in my opinion, not just the market cycle, the actual use of it in major ways until the Clarity Act passes.
So just to be clear, regulation, I think we think that in negative terms. So we think something has to be regulated because either something's bad happened or we're gonna put the stops to something good happening through regulation. Regulation is positive because what we don't have right now is the clarity, what is called the Clarity Act, on how coins should be treated.
So yes, is it a security? Is it a commodity? Is it a hybrid? If it starts out, you almost can always make the case that when a new crypto network starts, it starts as security because it's centralized. It's a small number of people have it, and it's a vested interest in their efforts, likely. Right. As it expands, becomes decentralized. What's that definition? There's all these things that are getting put in there. And I think the industry longs for this, no joke, clarity because largely because the 4 years under the Biden administration and how they dealt with crypto. They've functionally tried to put it out of business.
Right. They would act real friendly, and then they would
act, come in. We would like to talk to you, and then they would give them a Wells notice because they were going to come after them. The SEC basically everything in crypto was a nail, and they're just running around with their hammer.
Right.
So under this Clarity Act that they're working on, it seemingly most cryptos would be viewed as commodities once they're above a decentralized definition. That means that they're under CFTC, oversight. There would be some that would still be securities. They're trying to figure out how to have like a year or two period as something's new. It can kind of grow up. It certainly is a security, but like give it the ability to grow out of that, likely become a commodity without having to do full securities registration. Because something small that basically puts them out of business and is too onerous to kind of allow the technology to blossom. So we see it. I keep going back to this market seemingly has been trading sideways. It's more so gone down the last 4 months than up, but it feels like it's waiting for the Clarity Act. It felt more positive a week ago or 2 weeks ago when we thought it was about to be voted on. It seemed like it was going to pass. Then all of a sudden it didn't happen, obviously. So it's a catalyst. And I think it's a catalyst for the people that want to trade it, right? From a pricing perspective, but also a catalyst for the builders that want to have rules of the road, to knowing that if I do this, I'm not going to get sued and end up in prison, right? I have rules. I know what the game is that I'm playing. So
how does that, what gives people more confidence? You think people are going to go buy Bitcoin because of Clarity Act? Or you think it probably helps the other coins?
I don't think it has anything to do with Bitcoin.
Yeah, because Bitcoin's really been deemed as legitimate.
And it is a commodity. I mean, like they have said that. So it helps all the other tokens that are out to solve specific problems. Bitcoin is more of digital gold generalist, if you want to kind of use that analogy. The rest of tokens are generally trying to solve a problem or a couple problems. So it gives them the ability to say, this is what I'm doing. And take the example of those that are trying to solve payments problems. All of a sudden, it allows the banks to actually use them. Banks are not going to touch something that's unregulated because they are the most regulated industry in the world.
Right.
So it's kind of a stacking upon each other there. And just kind of, in some ways, it's also being defensive. Like if you have the administration, maybe the Trump administration goes crazy, or an administration after that decides they hate crypto. If there's regulations in place that is law, it's much harder for them to play games than it is currently, because it's at the whim of whatever they decide when they wake up each morning. So
that makes sense. Well, thank you for chiming in on these questions. We do a 3 questions in 3 minute segment.
Okay.
You've been on the podcast many times.
Sure. We haven't done this though.
But we haven't done this.
Yep.
So the Wiser team is taking turns doing it as they come through.
Okay.
We don't ever repeat it. So we just do it one time until we change the question.
Are you going to have to have different answers every time?
Yeah, no, you have to have different answers each time. So let's take 3 minutes here at the end of the segment. And let's say, or let's ask, first question, what's a money mistake you're weirdly glad you made?
Mistake is probably a little bit in air quotes here. But my wife, Tessa, this is Thanksgiving of 2022, and we're going around the table saying what we're thankful for. It comes to her, and she had like a week or two prior had bought a horse, and supported. I hadn't been to the barn many times to see it, but it is what it is. She comes around, she's like, "I'm thankful for my horses," and I'm like, there was an S on the end of that. And so she's from Nebraska. She grew up with horses, so I knew that was like a happy spot for her. But I guess the mistake here, again in air quotes, was being supportive. I've come to love being around the horses. I admittedly do not like riding them at all. Right. I do it maybe once every couple of years.
I saw it at Christmas time.
Yeah, that was when I had nothing else to do on Christmas morning. We went on a trail ride, which was beautiful out this year. But just they're like big dogs, and I've come to enjoy their personalities and kind of being able to do things around and for them and stuff. Right. And have another business that's blossoming out of that. So we'll kind of see how that goes.
If you could only travel to one place, where would you go and who are you taking? Yeah,
so being incredibly busy, like I would like to be able to go to our house in Idaho more often. That's my answer. And anyone that wants to go, really. I actually don't mind being there by myself. I've done that a time or two.
Right.
But I think as the barn gets finished building and get done with my check right here for flying, I will have more time back. I'm quickly going to go from having no time to having a lot of time. It seemingly happens, and maybe I'll spend some more time out there. So,
what is something you believed strongly 10 years ago that you don't believe anymore?
Mm-hmm. So those that know me know that I come from a software development background. I've, for basically probably a couple of decades at this point, told people that didn't mind sitting in front of a computer that become a software engineer, you have a job for the rest of your life. I don't know if that's the case anymore. AI is is already starting to transform that industry. So AI can write a lot of code. Software developers largely, this is a very blanket statement, but I don't think it's 100% true, are there to stitch these things together. But this is early days for AI writing code. At some point, it's kind of like, what's the developer do? Then you start thinking about robotics with AI, like all that world. So I don't think that anyone's job is safe for the rest of their life.
Any industry could be disrupted.
I don't care what industry it is at this point. Yeah. I mean, once we have good robotics, surgeons are ripe for the picking too. So exactly. It's a crazy world. I mean, or pilots for that matter.
Yeah. So. It'll be a while for them.
It'll be a while because people that are sitting in the back want to know that there's someone there to troubleshoot if there is a problem. That's what that job will be for a while.
We were somewhere recently, and it was my wife's first time seeing a Waymo, and I was like, "Oh, that's a car that doesn't have a driver. It just computer picks you up and drops you off. It's like an Uber, but there's no driver."
Yep.
And she's like, "I would never get into that. I would never trust that." Yeah. And it's like, well, thousands of people do.
And more every day. Absolutely.
And more every day. Yes. Yeah. What I've read about Waymo recently was it adapts to the driving of the city.
Huh.
So it's adapting to how people drive. So it's not like this little slow car doing that, that.
In Atlanta, that would be a problem.
So Michaela was telling me, because she lives down there, she's like, these Waymo cars are super aggressive now.
Like honking horns,
they'll just like cut you off, and they're moving with the flow, zigzagging in and out of lanes. I'm like, well, they're supposed to adapt to their environment. So if we drive crazy in Atlanta, it'll be driving crazy with us.
I don't know if that's a good thing or bad thing.
I don't know if that's a good thing or a bad thing, but it won't cause accidents because it's too slow, I guess, or driving the speed limit.
Right, which is a big concern in Atlanta because everyone drives so quick. So
yeah, exactly. All right, those are good answers. Thank you. Thanks for listening to today's episode. If you guys are interested in learning more about Wiser Wealth Management or want to schedule a consultation to meet with one of our fiduciary financial advisors, you can do so by going to wiserinvestor.com, or you can click on the episode notes. Also, in our episode notes today, you can link directly to Teton Crypto Capital if you would like to learn more about investing in their fund. Thanks for listening.
Thanks for listening to a Wiser Retirement podcast. We hope you enjoyed today's episode. Make sure to subscribe wherever you're listening. That way you don't miss any new episodes. We'd also appreciate if you could leave a rating and review. If you have any questions about anything that was discussed today, head to wiserinvestor.com and reach out. This podcast is strictly for informational purposes only and is not to be considered as investment advice or solicitation to buy or sell any financial products, securities, digital assets, or any other investment vehicles, or a basis to make any financial decisions. Wiser Wealth Management Incorporated is a registered investor advisor with the SEC. The host and/or guests may personally own securities, digital assets, or other investment vehicles mentioned on this podcast. Neither the host nor guests of the show are compensated for their participation, and no referral fees are paid to or received by any host or guest for clients, listeners, or similar interests. Investments involve risk, and unless otherwise stated, are not guaranteed. Be sure to first consult with a qualified financial advisor, tax professional, insurance professional, and/or legal professional before implementing any strategy discussed herein. Past performance is not indicative of future performance.